boys and girls. How are we doing out there? Welcome to Trade School here at ReadySetCrypto. My name is Doc Severson. Today is Friday, the 29th of November. So whether or not you're watching with me here live, if you are watching with me here live, say hello. Let me know where you're coming in from today. We're doing a little bit of a different trade school today. We're opening this up to the public. So these are always a lot of fun. For people that don't normally see behind the scenes in terms of what we do for trade schools here through Omnia subscribers here at ReadySetCrypto. So welcome aboard. Let's have some fun today. I have a couple of interesting topics, at least I find them fascinating. And I think this is what a lot of people are talking about as well too. So first of all, people want to know like what the hell's going on with this market, especially when it comes to BTC USD. You know, like where's this thing going? Is it going to bottom out? Is this just the start of something really ugly to the downside? How do we trade it? How do we use this move and this type of volatility depending on what we're trading? And then what I want to do is get you guys teed up, set up for the Digitex public testnet, which starts tomorrow. And you should be part of as well too. So let's see where we got people coming in from. Latvia, Dallas. Gary's coming in from the UK. We have Vancouver. We have Ireland, and we have Jonna. Love the snow from the UK. We were just in the UK this year. We made another kind of trip, big orbit around the UK. Always a great time. Love going back there. Can't come back soon enough. We got Howard coming in from the Netherlands. I myself am coming to you live from, what is this? Greenville, South Carolina. We just moved here a couple months ago, enjoying the nicer weather. That is for sure. Okay. Let's see. James is coming in from Michigan. I hope you have some money on the game for tomorrow. It is the game. It is the rivalry, and I can't wait to watch. Should be fun. All right, so without further ado, let's get right into it here. I am going to throw myself down into the lower left-hand corner. I'm going to shrink myself just like the fly. And so I'm down here. If I get in the way, let me know, and I will move myself away from there. All right, so today's trade school, what we're going to cover. And let me know if everything is working okay. I mean, sometimes we have technical difficulties, so shout out in the chat room and let me know if something is not working right. Otherwise, I will endlessly babble into the microphone. Okay, so we're not going to be talking about any trades today, so we don't have to worry about the lawyers coming after us. Today's topic is my read on the current price move that we have out there today. So what's happening with especially BTC USD? As goes Bitcoin, so goes the rest of the world these days. And then we're going to talk about using Digitex in the beta. Okay, thanks James for letting me know. It's OSU. Everybody root for OSU. There we go. Okay, so what is the highest probability outcome for BTC USD going forward? Or what can Bitcoin's past tell us about how it's likely to move in the future? We're not sitting here with a crystal ball predicting what's going to happen, unlike so many people that are out there just throwing predictions at the wall. It's going to go down to 3,000. It's going to go down to 2,000. It's going to bounce from here and go up to 14,000 by the end of the year. How has that worked out for you to this point? For all of you following all these predictions that are out there on Twitter or social media or, you know, the various sites like Cointelegraph, how are all these predictions working for you? Probably not so well. You get seesawed back and forth from people that you fall under their spell. They provide, compelling evidence that the price is going to go one way or the other. You fall under their spell, you get confirmation bias. Next thing you know, you're on the wrong side of the trade. You're pissed off, and then you start looking for another guru to follow. The cycle will not stop until you learn to take independent control of your analysis. Don't follow anybody else. Learn how to do analysis yourself. Turn off the media. This will kill you in this business. Okay, it's easy to let short-term price movements shake you out, but you can't see the forest for being in the trees. What happens is you get so close what's happening in the last couple of days, right? The price is going skyrocketing up off the bottom. This could be the one, right? This could be the rally. And then what happens if it doesn't? You can't see the forest for the trees, and I'll show you guys a little bit about that. So this is why we apply a fractal top-down approach towards what we do in the markets, and this is why I think that you ought to do so as well. I love this video because what I want you guys to do is to let me know when it finishes, when it zooms in and it finally finishes, right? So we're going to zoom in, and it eventually will get there, right? It will eventually get there. For those of you asking about Mav, he is currently on a road trip. Actually, he went to see some of our extended family up in Northern California. So Mav, if you're out there, hello, keep driving, keep two hands on the wheel. Are we there yet? Is this going to finish? No, it's not. This is a fractal pattern. Notice how the pattern just keeps on repeating, and the larger patterns are formed from a bunch of smaller identical patterns. It just keeps on going and going and going. And this will drive you nuts if you watch this thing for any length of time. So this is what fractals are. We identify identical smaller patterns, build larger patterns. So let's zoom out and let's see what the chart looks like. This is a monthly log scale chart of BTC USD. So a log scale chart, you can, if you guys are curious, I can show you how to set this up in TradingView, but it's just a little click box down at the lower right-hand corner. And if we look at this, this is on Bitstamp. So this shows about as much history as I'm going to find here of BTC USD charted on Bitstamp. And if we look at this now, log scale, notice the log scale over here on the right-hand side. This is not linear. This is logarithmic. It shows percentage gains instead of just linear ka-chunk, 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 ka-chunk all the way up. And so what we're finding is this is very similar to the move that we're going through right now. You know, after going parabolic, this is the price that we have to pay for the FOMO. We're still paying it 2 years later. Here's the FOMO. This is the price that we're paying for the FOMO. Well, the trend line is still in place. Now, admittedly, a trend line is still an arbitrary piece of information. Just because there's a trend line that exists out there doesn't mean that the price is going to all of a sudden stop and go, holy crap, I have to stop here. This is a trend line. No, it's what happens with trend lines is that they end up being a self-fulfilling prophecy. If enough people see a trend line, then one of two things are going to happen. Either it's going to bounce there or it's going to get faded like crazy. We've seen both of those happen. But right now, I don't think a whole lot of people are looking at the log trend line. And what we see is that after going from range expansion, this is going into just standard range contraction. So even though this move has been inconvenient, it's been disappointing, it's been difficult, it's just part of the larger scheme here. So for the forest for the trees, if we zoom way the hell out on this thing, this is very normal. So this is not the end of the world. This is just Bitcoin doing what it does in price discovery. And there we go. Okay, so that's the monthly log scale chart. Now I'll come back to this in a minute because there's different types of traders that will use this for different things. So the weekly linear scale chart of BTC USD. So this is a standard weekly chart. So you'll see this 5,000, 7,000, 9,000. So this is a linear scale on the right. So this is what we normally look at is the linear scale. The logarithmic scale to me is only useful for something when we care about long time. Like I'll look at the logarithmic scale on the Dow Jones or the S&P 500 over the last 100 years. And it makes a lot more sense than does looking at the linear scale of a monthly chart on the S&P where we see all these gains coming in just the last 10 years because of their printing presses, right? So the weekly linear scale chart. So we've gone from the monthly log to the weekly linear. And so this is what I don't want to see. Anytime we see a move Here's a primary swing move. And then if we start to cut below the 61.8% Fibonacci retracement, typically what this does, and that was a weekly close below there, what this does is that this increases the odds that we may see a filling up of the triangle. Now, filling up of the triangle would be this and then all the way back down again. So nobody wants that. But regardless of the fact of whether I want it or not, it's showing that the probability has increased. And we have to pay attention to that. So this increases the probabilities that we'll see continued downward price action in the intermediate term. It doesn't mean the death of this. And in fact, I would not look at this in one way or another. It's just price moving. How you decide to interpret it is up to you in your head. If you decide to view this as an attack or something negative, then you're applying weight to it, and you're going to focus on what you fear. You're going to miss out on opportunities. We'll get into that in a minute. All right, welcome from Italy, Tony. Hello. And let's see, who else has showed up here? Dennis is joined from Greenville, South Carolina, so you must be right down the road. Hello, Dennis. Okay, so now we're going to move in on the same linear time scale. We're going to move down to a daily chart. We're going to keep moving in a time frame. Now, this is where most people spend their time, is on the daily chart. Why? Well, because most people look at this on a day-to-day basis. They don't use the weekly chart because they don't spend any time looking at things on a weekly basis. Okay? Can be a big mistake. So again, this is where we spend most of our time looking at the weekly or the daily chart. And boy, we've gotten a nice rally off the bottom. Could this be the one? Could this be the one? Well, based on the volume, I would say no. That's not going to do it. This is the type of bottom that we would normally look for, but it didn't go anywhere, right? It forms a higher high, and then it just ate itself to the downside. It's got to form a higher high to continue that. Much pressure, right? Much pressure on that. So transition to a primary swing to the downside, I would say in late December or late September, around this time here. Before that, it was just kind of a big weekly consolidation pattern. So we don't read too much into the swings in terms of the daily trend inside of here, because we have a larger time frame pattern. Think of a parent taking a walk with their 3-year-old son, right? Which way is the couple going to go? Or if you're walking their dog on the leash, which way are you going to go? Which way are the two of you going to go? The dog's going to go all over the place, which is kind of represented by the daily chart here. But the parent time frame is just basically walking sideways, just walking sideways here. And so that's what's happening. But we transition into a firm daily downtrend at this point. In fact, a weekly downtrend as well too, which is not good. So daily swings are at the mercy of the weekly chart trend, and we'll flip back and forth. So this is where I'm talking about you guys can get just whipsawed back and forth if you're looking at just one time frame. You lose the perspective, you lose the context of what could happen out there. All right. Now we're even going to go further in. We're going to act like that map where we zoomed in on that. And this is the 5-hour chart. So probably few of you are looking at the 5-hour chart on a day-by-day basis. You don't have to. Depends on what you're doing, right? So I'm not going to sit here and tell you how to trade. I'm going to offer you solutions based on what it is that you're trying to accomplish. So if you look at this, the 5-hour chart is just oscillating back and forth. We have downtrends showing up, and now we've had a reversal to an uptrend showing up. This was a downtrend reversing to an uptrend, right? So it's just going back and forth between a downtrend to an uptrend to a downtrend to an uptrend again, just back and forth like this. So this is going to fall under the influence of larger time frame patterns. Okay, so what does this all mean to you? This has been interesting information. You can go out to parties and you can thrill your guests with your read on the fractal charts, but then they're going to go, well, are you making money? And well, I don't know. I can read a chart, right? So you have to be able to apply this. somehow. You can't trade the market that you want, only the one that you have in front of you. Read that again. You can't trade the market that you want. So many people are out there moaning and like, oh, I wish it was 2017 again. I wish it was 2013 again. You know, like, you can't trade the market that you want, only what's in front of you. So you have to adapt your skill set to trade what's in front of you instead of just sitting there moaning about what's happening. But most retail traders continue to bang that square peg into a round hole. I'm going to buy the dip on this. Okay, how's that working out for you? It's like, yeah, you sure are lowering your cost basis, but it's going to form some friction. You're going to feel the heat at some point here unless this thing reverses. And, you know, as Paul Tudor Jones says, losers average down. That's him saying it, not me, not my fault. So myself, I prefer to paddle with the current. Imagine if this guy were trying to row upstream. That sounds like a lot of work, doesn't it? It is. It is a lot of work. So occasionally you can find a little pocket of rotating water that allows you to go upstream or just sit there in position, but it's a lot of work to go upstream. It's a lot less work to go downstream, and this is how I prefer to trade. So what you define as trading with a trend will depend on what you are trading as well as the time frame that you're trading it at. So for you hodlers and fundamental investors that, and I know you're out there because every time I do some kind of technical analysis presentation, you're in the chat window saying, dude, this is useless. Just buy and hold. Just buy and hold. Just hodl. Just hodl. This is all useless TA stuff. Fair? Okay, that's a fair argument if your only use for crypto is to buy and hold. If you're just a fundamental investor and if you believe that somebody will see the value in this 5 years from now, 10 years from now, and time is of no essence to you. Time is of essence to me. I don't know about you, but the finish line is rapidly approaching for me. So don't have time to do that. So your thesis is that over a long period of time, your chosen asset will gain value. Okay. Easy to see. All of the movements on the weekly and smaller time frame is noise. So even the weekly chart is noise to you, or should be noise to you. You are either dollar cost averaging and taking advantage of the recent pullback. So you're seeing the price go down and you're like, yes, okay. Or you are using technical signals to buy the pullback. So you can do it either way. You can use just regular dollar cost averaging, just, you know, like a metronome, tick, 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 tick. Every time it ticks, you're putting a certain fixed fiat value into that. And if the price is lower, you end up buying more coin, which is good. It makes sense, but only in a primary longer term uptrend to me. So the monthly log chart shows us to be a period of opportunity for you. So this could be a pullback here if you're a long-term hodler investor. Now, if you're a swing trader, this could be, you could be using spot crypto. So spot crypto is just the coin itself versus some other denominated coin. So like BTC USD, or you could be using EOS versus Ethereum or whatever strange pair that you want to use. So that's spot crypto. You can be using options. You could be trading on Deribit or LedgerX. You could be trading options and swing trading those. It's a good match. Or possibly you're setting up swing trades with spot or crypto futures. Okay. Hey, Tony, I'll take a look at, if you want to look at certain coins at the end of today's presentation, I will entertain those. I can pull up the chart and do that. Right now would probably be a poor time for me to stop what I'm doing here. So your goal with the swing trade is to ride a price swing on the weekly chart. That's your goal, is to find a price swing, whether it's going up or down, and ride that swing on the weekly chart, getting in at some point and trying to get the meat of the move. So right now we're seeing the direction is pointing down on the weekly chart, at least of BTC USD, even though we're seeing a daily bounce higher. You will continue to see the bottom drop out of seemingly good long trades. So this is what I'm talking about here, guys. If we're looking at the weekly chart, so I'll draw the weekly chart is like, is doing this. And so on the daily chart, what you'll see is that you'll see things like this. You'll see a good reversal like this. But then what you'll see is eventually the bottom will drop out of these because the weekly chart wins. Trade in the direction of the anchor chart swing. Short trades will be somewhat difficult to enter because they will set up when you least expect it. Okay, so even though I've just said that short trades are the easiest here, if you look at the daily chart, trying to enter a short trade, you got to be in it to win it because they'll just drop like that. So you will get very poor entries if you try to time a short swing trade to the downside. It's much easier to trade swing trades to the upside because you get half of a chance to get on board. Trade in the direction of the anchor chart swing. So weekly downtrend, no more short put options for me. So this is something that I was emphatic about with my Omnia members the other day. Is like, uh-oh, we have a weekly downtrend confirmed now. It's going to close. So timeout on selling put options. So selling put options is something that we've been able to do since this summer because we haven't had a weekly downtrend. Now we do. So I don't care if this thing reverses. So we could see something like this. So we have the weekly chart doing, this kind of thing. And who knows, we may get a reversal like this. I don't know. And if it does, great. So even if I stop selling puts down here, I'm not going to regret that decision. I will simply wait for the next pullback, which will give me a good entry. Don't forget, guys, that the entry that you pass up today, there's always going to be another one. Don't act like the setup that you see is the very last entry that you will ever see in your lifetime. It's not going to happen. Brown Puppy Doc did not get wrecked on put options, my friend. Doc got himself out of put options for a profit. And then we get scalp traders. This could be spot crypto, but definitely crypto futures. So some people can scalp with the spot crypto. It's not very efficient. The interface isn't that good. It's better to do this with crypto futures. Futures are ambidextrous, short or long. A lot of spot interfaces you cannot trade to the short side. You have to set up a margin agreement with them, and it's just clumsy. Just clumsy. So futures are the way to go. The idea is to get in and get out with your fair share. Don't overstay your welcome. Trade in the direction of the anchor chart swing. Enter on the signal chart. I'll show you more about this in just a minute if you're patient. You don't really care about the underlying trend, right? If you're scalping, you don't necessarily care about the underlying trend. So think of the tide. So if you want to go swimming, do you say, well, I only swim during the high tide because the tide's coming in. I don't swim during low tide because the tide's going out. I mean, come on. Most people don't care about that. They're going to swim whether the tide is, coming in or going out. Doesn't matter. So if you're scalping, you don't necessarily care about a larger time frame like a weekly trend. But it will actually make your life a little easier if you do account for that. But you don't have to. Okay, so here's what people want to know. Here's what people want to know. Okay. Yeah, like when will BTC be $10 again then? Okay. What's the price going to do next? This is all everybody cares about. They just want a prediction, right? People, if you're smart, what you'll do is you'll learn the tricks of the trade. You'll learn how to read a chart, and you'll stop trying to predict the future. Learn how to use a chart to analyze what you should be doing, and stop using either social media or charts to try to predict the future, because nobody can. There's not one person that I've heard today, yesterday, last week that can adequately predict the future. Nobody can do it. But we can look at things from what's the likely behavior going forward. Based on how this animal acts, we can sort of understand its personality. So first of all, the weekly confirmed downtrend has to be accounted for. I can't wish that away. So we should expect to see sharp rallies that get reversed and ultimately print lower lows. So what we're going to see is during this weekly downtrend, we are going to see some sharp rallies in that, and they're going to fail. And ultimately should print lower lows. Maybe. Am I bearish? No, but we have a weekly downtrend. You can't wish that away. So until we see capitulation, now I've talked about capitulation for seemingly years now, and I really haven't seen very good capitulation yet. Capitulation, when you see it, it's like something that you'll never forget, because you'll see the price just do something like this, and you'll see massive volume because just people are just going crazy. It's real fear coming into the market. And we haven't really seen fear yet. Not like we saw a little bit of fear back in February of 2018. So a year and a half ago, we saw a lot of fear coming in because all those people that got in at the end of 2017 were like, oh shit, what's happening here? So there was some fear there, but then it sort of went away. So we haven't seen capitulation yet. Then we'll most likely see the daily chart build a flag formation. This is what a flag formation looks like. It looks very much like this, right? So that's a flag formation. So we'll see something happening like this, or we'll see relatively low volume. So the volume will kind of tail off like this. So we'll just see people like, oh, I don't care anymore. This is boring. And we'll see these, we'll see these little swings like this. Am I predicting the future? No, I'm just saying this is typically what happens in a case like this, is that we build some type of consolidation bear flag. Now, what if I'm wrong? What if I'm wrong? Then I will see something happen like this on Mongo volume like that, and it will just blow out this trend line. It'll blow out this high, and we'll start really squeezing to the upside. And that'll be followed by some type of higher low, higher high. We'll know it if this is wrong, because we should see, if we're going to be staying in this pattern here, we'll see volume tail off. We'll see just apathy come into the market. Like nobody cares anymore. Oh, this is boring. I don't want to watch. I'm not going to look at my Delta portfolio anymore. So until we see that capitulation, then we'll most likely see this. And this flag formation will continue to consolidate in a slightly up to sideways manner on declining volume until it builds enough energy for the next move. Okay, so this is what we see. We're not predicting the future. We're just saying, hey, when this happens, and this is kind of like, what I was saying a couple of months ago, I was like, okay, there's an 80% probability that this symmetrical triangle is going to break to the upside based on chart patterns, based on Thomas Bolkowski's work and everything like that. And the problem is that I saw everybody expecting an upside break like this. I saw everybody looking for a break. And I said, you know what? I think it's going to break to the downside. Now, was that predicting the future? No, it's reading the herd. It's being able to read the majority of people, and the market will always move in the manner that goes against the trading herd. So if you're getting your information from Twitter, if you're getting your information from, Reddit or forums or something like that, where everybody says, yep, we all agree that this is going to happen next, it's more than likely going to go to the opposite direction, because markets move based on fear. When people get it wrong, they get fearful. They don't know what to do. They panic. So right now we don't have much energy in this. So I'm not expecting this thing to just puke from here. I really am not. That would be a low probability move. And that would probably be a very short move from that. But once we build up enough energy, once this yellow line gets back up into this area again, then we start looking for a move. Very similar to what we saw here. Okay. So here, what should have happened, if this was going to go anywhere, it should have broken out to the upside. We had all kinds of energy. We had a full fuel tank, and it instead decided to leak to the downside. Okay. No bueno. That tells you something there. These are clues that the market is leaving behind. It's not predicting the future. It's boxing in the price to say, look, if it doesn't do this, then it's got to be doing that. It's almost this if then else type of logic that you have to apply to the market. We will need to see this. I think somebody was asking me about the trend line before. We're going to need to see this descending trend line. This is one of my 4 rules. I call this rule number 3. We're going to have to see this thing blown up, that descending trend line, and it eventually will. Descending trend lines always get broken to the upside. Eventually it will. And typically it'll be broken through when people have given up on it. Technical analysis is psychological analysis, Dean. It is the analysis of herd behavior. It's not the analysis of one person or 2 people or 3 people. It's the analysis of when you have thousands, if not millions of people all moving in the same direction as kind of a herd. And this is where human beings acting in a crowd are very irrational. Show me a rational crowd that's gotten together in the news lately. They are not. People have this fear of missing out. If they see something happening, they're going to join people. You know, people that you'd never would have imagined will pick up a brick and throw it. Like, I don't know what came over me. It's because you were part of a herd. You can't help yourself. People want to be part of something bigger than themselves, even if it does great financial harm to them. Okay. I could go on for hours about that stuff. Actually, I do have a course coming out next month, which is going to be called The Trader's Edge, and goes on to all of these psychological elements of how do you start to think like a pro? How do you stop thinking with your limbic brain and start thinking objectively? It's not easy. It's very difficult to do, is to go against the herd. You're going to feel like you're all alone out there. Like, I'm the only person that thinks that this is going to go. If you have a good thesis for it, you got to stick to your guns, because going with the herd will almost guarantee you of losing. Okay. Pick your strategies wisely and trade with the current of the market. Your job is not to hate on the market or the whales or the bears or China or centralized exchanges or the CME. It's not going to make you any money, guys. Hating on other things that you can't control. I mean, I've been trading against much, much bigger forces than this in the market for the last 20 years, and you have to learn to trade with them and not against them. The more time that you spend focusing on what you fear, the less that you'll be able to take advantage of all the opportunities unfolding in front of you every day. This is one of the lessons that I had to learn a long time ago, is I was in a position that was levered up way too big, right? So I was on the wrong side of the price. I was levered up way too big. And it was all I could do. That's all I focused on. I just focused on that position, and every waking moment I would look over at it. How many times have you guys done that, right? Like, you thought for sure this was going to be a big time winner because you were trading with the herd. And so you doubled down on the position. You got way too much position size on it. And all of a sudden it starts moving in the opposite direction. You can't take your focus off of it. What you focus on will expand. So all of a sudden, all you can see is what you fear. And meanwhile, all this opportunity is going on around you. You're going to, as soon as you close the position, you're going to say, well, why didn't I just take a position in the opposite direction? Why didn't I flip around? And anybody could see that this thing was reversing, because you focus on what you fear. And you will all do that, not only in trading, but everything else. There's always opportunity in front of you. But if you just focus on the scary stuff, you're not going to see anything else. Okay, any questions on this before I move on to the Digitex stuff? TA's analysis of market makers. Retail plebs don't move the market. No, but retail does as an aggregate. Market makers, understand that market makers, and we'll talk about this in a minute because we'll see Digitex, they're just flipping the price back and forth. They're not moving the price on an aggregate. Okay, good. All right, so let's move on here because we've spent like 36 minutes and I want to wrap up by the end of the hour here. Let's talk about using Digitex Beta. First off, It was to my disappointment this morning, but I lost access to the early alpha interface. And I'm sure a lot of people that were in the early alpha are like, oh, what happened here? And then I got onto the Telegram and I realized that they're getting ready for the public beta tomorrow. So I'm good with that. I'm good with that. Can't wait to get back in again. So public beta starts tomorrow. You should be signed up for it. You should get involved in this, even if you don't know it yet. Because this could be something that could change trading as we know it. So I'll just work off of a screenshot from last week and offer some guidance on how to get started. So I've got 5 things for you that you need to understand and need to follow if you're going to use Digitex. If you're going to be part of this public beta testnet, here's 5 things to do that you'll need to apply starting tomorrow when you get access. Okay, number 1, use the ladder. Learn it, love it. The ladder is the best trading interface you'll ever use. And once you use the ladder, you'll never want to go back from it. This is what the ladder is. And I'm just going to highlight this over here. And I did bring this up a couple weeks ago. So if you didn't catch my earlier presentation, don't worry. But what we're doing with the ladder here is, let's go ahead and highlight that again. Okay, so here's the ladder. And what we're going to do here with the ladder is if you want to go long, you're going to initiate the position by clicking somewhere here. If you want to get long at the current price, then you're going to click right there. Okay, and hopefully you get filled. If you want to go long based on a pullback, so maybe you think that the price is going to pull back to 80.75, then you're going to put your position down here, and it's all based on the quantity, which you'll set. We're not going to look at this yet. Don't want you to look at the leverage just yet. It's very dangerous if you don't know what you're doing. So this is where you go to get long. To open the position is you're going to click in this at the price that you want to be filled at. And if you click down here to 80.75, let's say the price is going up like this, guess what? You're not going to get filled. The price is going to run away from you. So keep in mind that these are limit orders. Now, if you click anywhere up in here, at least it's been my experience, you're going to get filled right now. So that's basically like entering a market order, like fill me right now. Don't let this get away from me. What you'll do most of the time is you're going to be entering, either at the money or maybe, one tick below that, depending on what it is that you're trading, right? So, or maybe you're looking for a pullback. Okay, and then as soon as you do that, what your job is to get out. So you're going to put in some type of a limit order up there. So if you enter at 80.85, there you go. You can make a couple of ticks on this. And that's the game. Now you can expand this out. Nobody said that you had to just get filled here or here or here or something like that. You could get filled up here and make a bigger profit if you have more tolerance for this. Right, so this is kind of the game here, is that you're going to go long. This is buy to open, sell to close over here. But what you can also do is you can sell to open. You can sell to open up here by the same way. You can sell to open right there or slightly out of the money. Wait for a little bit of a pullback, or excuse me, a little bit of a rally. So sell to open, and then what you're going to do down here is buy to close. So buy to open, sell to close, or flip around, sell to open, buy to close the position later on. So this is going to be a little bit different for a lot of you that have not traded futures before in this manner. That is bidirectional. There is no bias to any one direction or not. We'll talk about trend here in a minute. Yeah, it's a ladder like TradeStation. It's not quite the same because it doesn't have one cancel orders. You can't do buy stops. So something like I'm used to doing would be if I want to get filled on a breakout, maybe there's a consolidation here that's happening, and maybe I want to get filled as the price pokes its head above here. Take me into a long position. I can do a buy stop up here. I'm sure that they'll add this at some point. This is the beta testnet, for God's sake. Let's let them get to market right now with a minimum set of features. Let's let that get stable so that they can get to market. We can actually trade something live on this. So I'm fine with that. I think that's right. But a buy stop is something that you definitely will use down the road. Just like a sell stop is something that you can, like, if the price breaks down through this level, then take me short. Take me into this short. This would be a sell stop down here. And of course, sell stops can also be used for risk management down the road. Buy stops and sell stops are typically market orders and can have some slippage to them. So keep that in mind. But these are limit orders. Right now, what they have is a limit order. Limit. Okay, so understand that you have to wait in line when you enter your entry or exit order. So let's look at this for a second. Let's say that you enter long here. Let's say that you enter long at 80.90 and you say, well, just fill me at the current price right now. But guess what? There's 196 contracts in front of you. So if you're going to enter your 10 contract order or 100 contract order, you're going to have to wait in line. No jumping the queue. Wait in line. Now, if you want to jump the queue, enter your order up here and say, fill me at the market. And so you may get filled up here. Somebody will be happy to fill you up there. But typically we're going to use limit orders, which are going to be at or below the current price. That's how a buy limit works. You use them at or below the current price. And if you go to enter, all right, so let's say you get filled at 80.90 and you just want to scalp one tick here. You're going to put your order for, let's say 100. Let's say this was 100 in over here. And you want to get filled for 100 out. You want one tick of profit. You're okay with your fair share being one tick. Now you'll see the price flip up to here and you won't get filled. And you're like, hey, what happened? The price went up to there. And maybe it's going to go down here. And then maybe it's going to come up here again and then come up here and you're still not filled. What's going on? You got to wait in line. Don't jump the queue. You got to wait in line before all these people. Now there's one magic thing that will happen that will guarantee that the price will be filled. The guarantee that you will be filled at 80.95 is if the price flips up here momentarily, because what that means is that all of this overhead supply has been cleared out. And the price now moves up to 8,100. Even for a brief microsecond, that means that you're definitely going to get filled. So the price will typically have to trade through a point for you to guarantee a fill on there. There's no guarantees that if you enter this order here to close out the position, price might just tip up to there, tip up to there, tip up to there, and then fade back down. This is one of the things. Now what you'll find is that these are kind of chunky $5 ticks on BTC USD. And what you'll find is that with some other instruments, once they start entering other instruments, you'll see better tick granularity to that. So you'll see less liquidity sitting on each, let's call them strikes here, but it won't be difficult. So this is very similar to trading like the S&P 500 E-mini, where they're quarter point tick increments, and you could be sitting there forever before you get filled based on when there's online. So Ricky is asking, with all the other options out there for futures, why Digitex? Because there's no commissions here. That's the key. So normally with an exchange like this, if you buy here and sell there, commissions will more than eat up that profit. That's no fun. Commissions is this friction, this drag that adds to every position that you enter, and you have to account for it. And over time, this is one of the biggest issues with traders making money in the markets, is that ultimately the broker wins. Ultimately, the broker wins. So very few people are able to overcome that friction from commissions. Okay, so hopefully that makes sense to you. It may not make sense until you get your mitts on this. And this is why you need to experiment with this. So down the road, there'll be bracket and one cancel other orders, which will include stops. Very dangerous to implement market stop orders right now. You will get nailed on these things in the test net. And there's a reason for that. So what's happening is you're seeing price go along, and all of a sudden or, you know, like something that will go down like 2,000 points and then the price will come right back up again. So this may be, you know, somewhere like, you know, 2,000 points. And why is this happening? It's because people are playing around. They're playing Nintendo on the testnet interface. So what happens if somebody, you know, markets are coming along like that and somebody sells 1,000,000 contracts or 2,000,000 contracts of something like that? They're going to take it down for that brief microsecond until it fills all the supply that it's looking for, or in this case, fills the demand, and then it'll go right back up again. Okay. Is that going to happen in the live market? Probably not. I don't see this happening in spot. I don't see this happening in live production futures with adequately liquid exchanges. So most of the big boys that are out there doing crypto futures right now, I don't see this problem, but it can happen. It has happened to me before with one particular vendor who I brought it to their attention and then they refunded the loss to me because they said, no, this shouldn't happen. So be careful using stop orders right now until this thing actually goes live, because in the test net, you just can't, you're just going to have different things like that happening. Of the 5 things, so that's the first one, is learn the ladder, love it. Love the ladder. You'll love the ladder. It's much, much better than anything else out there. So that's another thing for you, Ricky, is because Digitex has a true trading ladder, which I've been using for 15 years with the index futures, and I can't believe that nobody's got it out there yet. So number 2, trade with the trend. Recall me saying in the last section that I trade in the direction of the anchor chart swing. And for me, that's the 5-hour chart. So this is what I'll do. And if you're curious about this, I've got a futures class that's got this all laid out. So I'll use this 5-hour chart. This is the anchor chart. Anchor, anchor, anchor. And oh, by the way, we do have a Black Friday sale, just like everybody else, but we have a Black Friday sale, which is, gosh, I think it's like 10% off of everything that we sell for our courses is available today. So that's the end of my pitch for today. Anchor chart swing. I've got Heiken Ashi set up on these candles. So basically, if we're showing green candles, we want to be trading in this direction. It's that simple. If you're showing red candles, you want to be trading in this direction. Red candles go in this direction. Red candles go in this direction. Be careful when you get too far. Try to enter up here. Don't try to be entering down here. This is what everybody wants to do because it feels better down there. Just like everybody wants to go long up here because it feels better up here. Okay, so trade in the direction of the anchor chart swing. Number 1. Number 2, do you have enough gas in the tank? So this is where I'll go to the 5X. This is the 5X chart. This is 5 times larger than my signal chart. Here's the signal chart. The only job of the 5X is I want to trade generally in the direction of the 5X swing, and I want to make sure that there's enough gas in the tank. I don't want to be entering this while it's exhausted, because that's a low probability entry. And then lastly, all I'm looking for is a hook entry on the 1X. Just a hook entry. In this case, long. You could have entered there. You could have entered there, right? So it's a simple system. It's 3. I talked about fractals before. 3 different time frames. This is 25 times larger. That's the 25 times larger. That's a 5-hour chart. It's 25 times larger than the 12-minute chart. Here's the 60-minute chart, which is 5 times larger than the signal chart. I make my signal entries over here, trade in the direction of this chart swing here. Just use this for understanding whether or not the context is ready for the trade. So do you have to use these time frames? No, you can go down to, I mean, if you want something really whippy, you can do a 1-hour chart and something that's 25 times, well, now we get into minutes, you know, like what's 1/25th of a 1-hour chart. Okay. So you're going to have to split hairs in there. So a lot of times it's easier if you just pick something like even if you wanted to use a 1-minute chart, this would be a 25-minute chart over here. And then this would be a 5-minute chart. Pretty whippy, a lot of garbage. I find that the 12-minute chart right now is good enough for what I want to do. I use the 5X. Okay, so this is just kind of a repeat here. I use the 5X or 1 hour chart to determine if there's enough gas in the tank, if there's enough energy to power the next move, and then the 1X or a 12-minute chart to signal the entry. That's my signal chart. That's all it does. Okay, so again, trade in the direction of the anchor chart swing. In this case, we're going this way. Look for energy. Do we have enough energy up here in this area? Yes. Okay, so either here or here, both of those are good. And then we're going to look for signal entries. In this case, these are the long signal entries off of the RSI in Laguerre time. It's not a regular relative strength index. It is using the Laguerre time transform, which is also part of the course. So you don't have to go to the complexity of using a triple fractal system. A lot of people use something simpler than that. I've been using this for the last 15 years like this, and so it's simple for me. My job is to help you understand how to use something like that. This is a much more accurate way to do it if you use the 3 different time frames. So regardless of your setup, find a way to paddle downstream on your scalps. Don't just sit there in the Digitex interface and go, I want to go long because I feel like going long. Why? Make sure that you're going with the anchor chart swing. Find high probability entries on there to enter. Don't just play with the dome, right? Just don't play with the ladder and just go, oops, I'm on the wrong side of price here. I guess I better get out. Number 3 of 5. So I'll wrap this up here quickly. Thanks for your patience. Thank you for joining me here today on Black Friday. I'm sure you guys would rather be out at the mall, waiting in line, driving around, trying to find a parking space today. So good on you for hanging out and avoiding that stuff. Number 3, treat the beta like a pro. When you get a testnet account with 2 million tokens, the first thing that gamers are going to do is act like a whale and say, woohoo, I'm a whale for a day. I can't believe this is so much fun, right? Well, this is a waste of your time, and it reinforces bad habits. It also creates a bad experience for others for what I just talked about here. It's going to create bad price discovery. It's going to create artifacts on the chart. And, you're just not a good team player if you're doing stuff like that. So use the testnet beta as if your very future depended on it. Learn to make money using your system, whatever that system is. And then number 4, this goes along with this. So I guarantee that some of the biggest problems that people are going to have with Digitex when they start trading is they're going to try to fund a very small account. They're going to lever up the leverage. They're going to use the max contracts day one. And they're going to say, I got wrecked. And I'm sure there's going to be a Twitter account created that is Digitex wrecked or something like that, right? Why do we celebrate failure in this context? It's ridiculous. It makes no sense. Why do you waste your time trying to be a hero? Hey, look at me. I just did 1 million contracts on here. Well, yeah, not for very long, right? So trade small, trade often. The biggest mistake that I see futures traders do is immediately start using too much leverage, too many contracts, letting their ego dictate the position size. Never use, I want you to write this on your wall. If you're going to do this, write this on a Post-it note, write this on your forehead, whatever. Never use liquidation as your stop loss. Again, it's celebrated out there. I got wrecked. Well, good for you. Okay, there's one less person that's going to fund my account. Never use liquidation as your stop loss. Your goal with the testnet is not to make money. What are you, crazy, Doc? Are you insane? Of course I want to make money. No, your goal with the testnet, your goal with building this and getting on board is not to make money. Let me tell you what your goal is. Your goal with the testnet is to create a positive expectancy system that works. Your goal is to learn how to make money with this. It's not to have fun. It's not to get on there and say, this is so addictive. This is so much fun, right? Because you won't be doing that for very long. Create a positive expectancy system that works, which you can scale up later. Create purpose for every trade. This is not a video game. It is addictive. There's no question about this. This is a dopamine factory. Getting involved. Ooh, look at this. This is fun. Bids ass, or, and it's Very admittedly addictive. It can be like that. You don't want to do that though. You will not win over time. Trade extremely small positions. I can't underscore this any more than this, especially when you go live. Trade extremely small position size to begin with. Your ego will fight you on this. You're going to see other people saying, oh, I just traded 1 million contracts. They won't be doing it for long. And when they get wrecked, you won't hear it. It doesn't make sense. I've seen this happen for years and years and years now. And don't be another statistic. Earn the right to trade larger position size based on your performance. When you get confident with this, when you have a positive expectancy system, you can earn the right to trade larger position size. You can even use things that are really cool that we teach in the program called fixed ratio money management, where you're actually trading larger on purpose because you're playing with house money. Pro traders are excellent risk managers. You're trading against me, guys. They know that if you're out of capital, they're out of business. So treat even testnet capital with respect, as if it were the real thing. If you can't do this with free money, how on earth are you going to do this with live money when all of a sudden it counts? You're going to trade differently. Your job with the testnet is to teach yourself how to not tell the difference. And the best way to do that is to keep your size small. Earn the right to trade larger. And then lastly, this is the last preachy thing that I'll go over here, is to iterate and learn. It's okay to get in there and swing away for your first trade. Get it out of your system, right? Just get in there, swing away, have some fun, learn how to, go long, learn how to go short, learn how to clean up a position, learn how to get out of it. More than likely, you haven't used the trading ladder. I would say for 95% of you out there, you've never used the trading ladder before. You need to learn how to do it. Go ahead and swing away. But you got to transition as soon as possible to create a learning loop. So after every trade, you need to evaluate that trade and to learn from it. Say, did I do all the right things? And so one of the things that I'm always using, and I learned this from a gentleman by the name of Brett Steenbarger, is to create a tracking system. So a tracking system is something that I'll use regardless of any market that I'm trading, because I've got to do Pareto analysis. I've got to see what I'm doing wrong. I'm a human being. I'm a flawed, logical existence, right? We are irrational when it comes to risk. And so what do I need to learn to do? Remember, you're not trading against the market. You're trading against yourself. And if you trade long enough, you'll learn to understand that. So learn from every trade. What I do is I'll set up goals. So maybe this is my business plan. And then through that business plan, I'll say, well, I need to come up with a set of trading rules. I'm not going to just enter just because I feel like it. I have to come up with a logical set of rules that define an edge against the herd. And then after I get a few trades in place, I'm going to get some results, and I need to evaluate those results. Are they what I thought I was going to do? I need to make corrections and maybe go back and revisit my goals, and maybe revisit my rules and make changes to those rules. And then I'll get some more trades in place. The idea of this is that you create sort of this ever increasing learning loop that as you go higher, this is where your performance will increase. And then of course, you put the dollar symbol or the pound symbol or the euro or whatever. The more you do this, the more you should be able to learn and earn from this. Okay. So 5 things, a summary, and then I'll take questions here for a couple of minutes. Learn the ladder. Learn how orders get filled. Trade with a trend, however you do it. Go downstream. Don't try to paddle upstream. Treat the beta like a pro would. Your job is to create a system, not to earn money yet. Create a system. Learn how to make money. Don't earn money yet. Trade small, trade often. The smaller that you trade, the less influence that your subconscious mind will have over trying to protect you against that. And your subconscious mind, for 99.9% of people, is there to thwart your risk, right? So it sees risk as a bad thing. That's what you've been taught since day one. And it's going to step in and do the wrong thing. So you got to treat it and train it. And the best thing you can do is to trade small. Trade small. Learn from a recycle. Build your system. And that's all I got for today. So we just hit 1 hour. So thanks for hanging out with me here today. So hopefully that's of some use in terms of what I see as far as the going forward in the market. And the Digitex testnet, which I think is could be a real game changer for a lot of retail traders. Okay. Let's see. Thanks, Tony. So Ricky, so you do long-term and short trades. Are you aggressive in the short-term hourly trades? No, I'm not aggressive or anything. It's just a system, right? So you can trade the same setup, and this is why I like using the Fractal system, because it's neither aggressive nor conservative. Each trade is just simply a different time frame. So like in a swing trade, I may use the same exact system, but maybe I'll stay in it for a number of days. And maybe I'll get a larger profit, whereas a scalp trade, you're only in it for maybe minutes at a time. Using more leverage, so yeah, it might be viewed as being a little bit more aggressive, but I'm using the same risk management strategies. Okay, so let's see. We can take a look at a couple of coins here. Let's just go to a single time frame. And I don't know if I'll be able to find these or not, but we'll take a look. So let's see, Atom. We'll look at Atom versus the US dollar. Okay, so this is something that's starting to work a little bit higher. And if there's any question, what I look at is, are we in a weekly trend or not? And so far, this is just a lower high setting up on the weekly. Well, maybe. Okay, no, we actually have a higher high and a higher low. So we actually have what's the beginning of a weekly trend here, which is good. Okay, so if we pull this over, we're just looking at the price here. Little bit of a flag pattern here, a little bit of a flag. I don't like the volume on this one. So this could be a larger time frame flag. I like to see reversals that really power higher, because what that means is you're really spanking the shorts. And right now what this is showing is that this is kind of just, this is more of, a larger time frame bear flag at this point. So this, you can play within the flag. I mean, notice that you can play within the flag settings here, and these still make pretty decent swing trades. So this is big enough of a swing that where you can maybe play something inside of there. But I would be careful of this one setting up a lower high and then pulling down again. Okay, so well, I spent the first, so Bitcoin, yeah, we can talk about Bitcoin, but I spent the first half hour talking about Bitcoin. What I felt was that we were probably more than likely going to be setting up some type of consolidation here. Now, with any luck, we have some kind of capitulation event like this, is that this eventually breaks down from here, and maybe it just retests and undercuts 6,500. 6,500 is a very, very important level. And if we get an undercut of that, we're going to get a lot of panic, and this is where we could get into a real short squeeze arrangement. So I love double bottoms, especially on an undercut of that, the first level, which is just above 6,500. So right now, this is, to me, the most likely outcome for this, is that we've got a little bit of work left to go to hammer out a bottom. But for the next couple of weeks, I think we'll probably be stuck in the flag. Now, I will say that I'm wrong if this thing does one of these, right? If we just blast off above there, but I'm not seeing the volume to do that right now. I'm not seeing the catalyst nor the volume to do that. So Ricky is saying, so you trade a system, and when it generates a signal, you take it because you don't know the outcome. You manage with proper risk management. It's exactly how it works. If I put too much of my own subjective thought into that, sometimes it will save me, right? So sometimes it'll save me, like, the breakout that we had. If I had said, well, I think it's going to go long based on the system, and maybe there was a hook here and everything like that, a hook to go long. I would have said, I don't like that. Not that I did not take the short here, but I did sell against this level with options. So these, I mean, this was like a 12-minute move. This was crazy. I think this was the span of an hour. If you weren't there, forget it. Okay, so let me take two more questions here. Somebody else is asking about the Ethereum versus BTC. So I don't know why. Oh, let me do it right here. I don't spend any time looking at this one. That's kind of a head and shoulders looking sort of thing. This would show the strength of Ethereum versus Bitcoin, and that's been a losing proposition for quite some time. As you can see through the trend, and if we go out to the weekly chart, it's quite obvious that this is, you know, we thought the flippening was going to happen back here in 2018, but it never did. So Ricky is saying, is this what you teach in the course? So first of all, the fractals, the use of different time frames is what I teach in the fractal energy trading course. And then in the futures trading course, I teach the more of the application of the fractal energy trading and the setup. So of course, if you're an Omnia member, you get access to all the courses, everything that we have for one monthly low fee. And that's what we do. That's what we encourage people to do is if you want to do this seriously, then become a member because you also get access to our discussion room. And there's a lot of very good traders in there. Actually, we've got plans to really significantly expand the trading aspect of what we do. So we're going to be creating a lot more trading activity and a lot more trades fairly soon. Okay, it looks like we are dry for now. So I wanted to thank everybody for attending and hanging out with me here today on Black Friday. So again, my name's Doc Severson. Thanks very much for hanging out with me today. And I'll see you guys back here next week. Take care now.